What's up, guys? Welcome to episode 17 in my monthly series where I present to you my top 3 dividend stock picks of the month designed for income. So if you're new to the channel, welcome. This channel focuses on a long-term buy and hold income-focused investing strategy. So the primary objective of this strategy is to generate relatively safe, consistent, passive income forever. So we achieve that goal by investing in funds that primarily hold blue chip stocks and that use income enhancing strategies like covered calls or leverage in order to achieve that high income. So this strategy enabled my wife and I to become financially independent in our mid-30s. So if we can do it, so can you. I'm Canadian, guys, so most of the stocks and funds that I talk about on this channel, including my stock picks, are listed on the Canadian stock market or on the TSX. But since more and more of my viewers are from America or outside of Canada, I'll make sure to include at least one stock pick out of the 3 that is listed on the US stock market. So this will be the first pick. Don't forget that as Canadians, guys, you could avoid the 15% withholding tax on US dividends by keeping those US listed funds in your RRSP account. The RRSP account is the only account that is immune or does not have that 15% withholding tax on US dividends from US listed funds like the cash account does and the TFSA does. So if you like that US stock pick, my first pick, try to put it in your RRSP. Also, guys, don't forget to check out my previous month's stock picks, because if you're new to the channel or missed them, a lot of those picks are still good right now. So I even have a specific YouTube playlist on all my episodes for my stock picks of the month. So in terms of the stock market, guys, stock markets are still at pretty much all-time highs. I saw maybe one bad day on July 19th, but that's pretty much it. The market just seems to be going up and up every single day. Every single sector seems to be doing pretty good, especially financials and real estate. Energy is lagging a little bit, but hey, what else is new? When you mention oil and gas nowadays to any investor, they just run for the hills. Meanwhile, half the stuff they use in their home is made up of plastic, which comes from oil. Anyway, although it's definitely more difficult to find great deals out there on the stock market right now, investing regularly is key for all investing styles, in my opinion. It's what I was taught in high school, and it still holds true today, instead of hoarding your cash and trying to time the market. So I released a video less than a week ago, guys, on how to invest during a strong bull market like we're having now. So if you're interested on how I think you should invest these days, make sure to check out that video if you missed it. So the 4 criteria, as usual, for my monthly stock picks. Number 1, I own the stock or the fund myself. Number 2, the fund must provide a consistent source of passive income, so a dividend or a distribution. Number 3, the dividend or distribution must be relatively safe and sustainable. And number 4, the stock or fund needs to have relatively good value. So you want to try to buy something that's a little bit discounted. So without further ado, here are my stock picks for the month of August 2021. Alright, guys, pick number 1 is RYLD, the Russell 2000 Covered Call ETF. This is a US listed fund, US listed ETF. So the dividend payout is monthly. The annual dividend is $2.95 a share. Keep in mind, this is the 6-month average, because for this ETF, the distribution changes every single month. So this is the average. So RYLD is really a very high income ETF that tracks the Russell 2000 index. This index tracks 2,000 of the smaller to medium-sized corporations in the US, which we'll see in just a second. So this ETF, like the name says, uses the cover call strategy to enhance the dividend yield. So the 1-year high stock price, $25.71, which gives you about 11.47% yield, which is phenomenal. But the July 28th stock price, the recent price, is $25.07, a little bit less. It is close to the 1-year high, but so is pretty much everything nowadays. So you would get right now, if you would purchase this ETF, an approximate yield of 11.77%. So what is the Russell 2000 index? A lot of people know the S&P 500, but not or the Dow Jones, which is like Dow 30, if you will. but not many people know the Russell 2000. So here is really a really good graph to make you actually understand what the Russell 2000 index is. So the Russell 3000, think of it like the 3000 biggest companies in the US. So you have the S&P 500, which is the 500 biggest. Well, the Russell 3000 is even more. It's the 3000 biggest, and then you have the Russell 1000, which is the first 1000 of the Russell 3000, right? So you could actually see in terms of market cap here. But then here is the Russell 2000, guys. So it's actually the 2000 companies in the Russell 3000, but at the end, so the last 2000 companies. So you're really getting here the smaller to mid-size companies in the US. So it's a really, really nice exposure, which I'll show you in a second in my key points of reasoning. So RYLD is really QYLD's younger brother. It's managed by the same fund manager, Global X, so it has very high yield and monthly distribution. But what I really like about RYLD is that it has a unique and niche exposure to the smaller to mid-sized companies, all with one ETF, which is really, really good. This, like QYLD, it has consistent, very high dividends in 2021 are very, very impressive. You actually have the breakdown here of all the distributions since January 2020. So as you could see here, 19 cents, 23 cents, 15, 17, 18. So they do fluctuate, but in 2021, they've been absolutely stellar. They've been consistently over 24 cents a month. So I'm really, really impressed by the monthly distributions of RYLD. Very, very high and very, very consistent, although they do vary monthly. So one thing to keep in mind is higher volatility equals higher distributions because covered call premiums are higher with volatility. So if you didn't know this, covered call ETFs actually thrive when there's volatility. The higher the volatility, the more expensive those covered call options are that they sell, so the more income you make. So RYLD, just like QYLD as well, they use aggressive at the money call options, which generates that really high yield over 10%. So really, really cool fund, a perfect ETF for high income investors like myself. And if you're Canadian, this is also great for us, but make sure to try to put it in your RRSP so there's no 15% withholding tax on the distributions that you get. So these types of high yield funds don't exist in Canada, so it's a really, really cool addition for us Canadians. Pick number 2, it's FAP again. So I know what you're saying, not this one again, but hear me out, guys. So FAP is the Aberdeen Asia Pacific Income Company. So this is a TSX listed fund. It's listed on the Canadian stock market, but there is also a US listed equivalent, which I will show you in just a second. So it's managed by Aberdeen. The dividend payout is monthly. It's at 27 cents a share right now annually. So this fund holds corporate and government bonds in the Asia Pacific region. Yes, I know it's bonds, fixed income, which I'm not big on, but this fund is really, really cool. So the fund uses leverage to enhance the yield. That's why it has such great yield. It does use leverage. So the 1-year high stock price, 336, which would give you 8.04%. But right now, recently, it's at 317. So you would get a really nice yield for fixed income. It's really nice anyway, 8.52%, which is really, really cool. So my points and reasoning for this one, it's one of the only income funds or closed-end funds in the Canadian stock market that's trading at a really big discount at 17%. So the US equivalent ETF is actually FAX, and it's trading only at a 5% discount, while the Canadian one is trading at a 17% discount. So what am I talking about here? Let me prove to you what I'm saying here. All right, so if you actually go to the websites here, I'm on the website of FAP here, and as you could see, the NAV is 382, the market price is 316, so it's trading at a huge discount of over 17%. But if you go to the US equivalent, which is the exact same thing but listed on the US stock market, the stock symbol is FAX, you will see that the NAV is 460, the market price is 433, so it is still trading at a discount, but a much lesser discount rather than the Canadian equivalent at only just under 6%. So that's what I mean by it's really the Canadian one, FAP, is trading at a really, really big discount right now. All right, so moving on. So this fund offers a really nice yield thanks to the leverage. It has monthly distributions. It has unique and niche exposure. It's very hard to get exposure to the Asia Pacific region for us Canadians or even Americans. So it's a really nice way to bring some spice, some exotic diversification in your portfolio. And another thing I want to point out, guys, is that the fund manager recently announced, or Aberdeen recently announced, a share buyback on July 20th. So they actually announced an NCIB, normal course issuer bid, which in Canada is just a fancy way of saying a share buyback program. So it means that they are going to buy back their own shares because they also feel, they being the fund manager, that the shares are very, very cheap. So this is a good sign, and it usually makes the stock price go up. So the NCIB is valid for 1 year. And yeah, like I just said, this typically makes the stock price go up, which it has been going up since the last time this was a pick of the month. So it turns out I was right. I think it was 2 months ago or 3 months ago where FAP was a pick of the month. I can't remember. But it turns out that I was right because the price is steadily going up and up and up. So I think it will still continue to go up. And I just noticed a typo. For some reason, I always spell Canadian wrong the way I type it, but whatever. Pick number 3, guys, is ZWU. So this is another TSX listed or Canadian listed fund. One of my favorites. You all know this. It's the BMO Covered Call Utilities ETF. So the fund manager obviously is BMO. The dividend payout is monthly, and the current annual dividend is pretty steady at 96 cents a share. So ZWU, like we'll see in a second, I'll show you everything, holds the top utilities, telecom or communications, and pipeline companies in North America. So the ETF, like the name says, uses a covered call strategy to enhance the distribution yield. So the 1 year stock price, $13.12, which gives you 7.32%. But right now, recently, it's at $12.98. So very, very close, giving you a nice yield of 7.40%, which is pretty good for utilities, a very stable and defensive sector. So what does this ETF actually hold? Well, here it is, guys. I'm showing it to you, everything here. So you have the BMO Equal Weight Utilities Index ETF. So it holds another BMO ETF. So in this ETF, it has all electricity companies: Fortis, Emera, Hydro One, Algonquin, all the best ones in there. And then the rest are all pipeline, other electricity companies, and telecom. So you'll recognize pretty much all of them. You have Enbridge, TransCanada, and Pembina Pipeline. Right there, the 3 biggest pipeline companies in Canada. And of course, you have the 3 biggest telecom companies in Canada: Rogers, Bell, and Telus. And in the US, we have some nice US exposure here as well. You have Duke Energy, Exelon, Southern Co, PPL, which are all electricity companies, and you have Verizon, AT&T for their telecoms as well. So really, really good exposure here. Very, very defensive on really all the best ones in North America in terms of utilities, telecom, and pipeline. So ZWU, these are my points and reasoning. They should make complete sense, right? They focus on utilities, which is a very defensive and stable sector. It's always a good buy in a strong bull market. So I was talking about a previous video that I released less than a week ago about how to invest in a strong bull market. And one of the points was, well, invest in defensive sectors that typically don't move much. So ZWU is a perfect fit. So this is really an easy way. Just with one fund, you have the best utilities in North America, enhanced yield, of course, of 7+% yield, thanks to the covered call strategy. And this, for this ETF, BMO actually gave it a low to medium risk instead of a typical medium risk like other covered call ETFs. That's because it's defensive sectors. It's very stable. Because, everyone needs their electricity, right? COVID, no COVID, market crash, the economy not doing well, economy doing bad, doing great. Everyone needs their electricity, so it makes sense. So this is really a perfect solution for income investors like myself to have yield and safety as well. Another thing I want to point out is that the distributions, the monthly dividends or distributions, are very tax efficient because a portion of them are, yes, there's eligible dividends and a little bit of foreign income because of those US listed funds, but there's a lot of capital gains and ROC income or return of capital, and those two are much more efficient than eligible dividends. Don't forget that. Another thing I really like about this ETF, it's one of BMO's oldest covered call ETFs. It's one of the original ones, along with I think ZWB, the covered call bank. So it's been around since 2011. So it has a really, really good track record as well. Thanks for watching, guys. As always, please hit that thumbs up button, that like button. I would really appreciate it. It's free for you. It helps the channel grow and reach more people, so it's a win-win. Also, make sure to visit my website, passiveincomeinvesting.ca, where you could access and purchase my digital product, the Ultimate Dividend Passive Income Investing Package version 2.0, which is all my years of research put in a couple of spreadsheets. You have ETFs, you have closed-end funds, you have split share funds for Canadians, and you also have sample portfolios for both Canadians and Americans as well. So it's a pretty cool product, which is really designed to help you get started and build your own custom portfolio. On my website, I also offer a one-on-one consultation service with me personally, but I'm completely booked up, completely sold out until October. So I'll let you guys know when the October appointments will be available. I love doing these consultations, and I know they fill up fast, but I will keep trying to make more and more available as time goes on. Finally, guys, make sure you're subscribed so you don't miss out on my future content on passive income investing, as well as my community posts. I release community posts once in a while. Once a month, I do a survey of the month where you guys, the viewers, can decide what topic I cover next. So all you need to do in order to be able to vote is be subscribed. So make sure you hit that subscribe button. Also, visit us and follow us on social media. We're on Instagram, we're on Facebook. We have a Facebook group with over 2,000 members. So if you're interested in joining us there, the links are all in the description below. So make sure to join us there if you use those social media platforms. Our Facebook group just keeps growing. We have a nice little community there, and people ask all kinds of questions and respond. It's really, really fun. Our mission, my mission of this channel is to help everyday working people, guys, to invest on their own in order to build their own source of passive income to enhance your quality of life, and one day also, like us, become financially independent. So with that, take care, guys, continue to stay safe, and see you next time.